Speculators are gamblers, plain and simple. Talk to them and they'll tell you that they're not. They'll tell you that they follow a system, they watch trends, they read market reports, they know what they're doing. Thousands of people in Vegas will tell you the same thing. They say, you know what, we know what we're doing, we know how the cards work, we know how the numbers work, we play with intelligence, we follow trends. And yet, walk down the strip in Las Vegas and see the billion-dollar buildings, somebody's paying for those. It's amazing what people will rationalize in their behavior. But you know, I see it a lot like the game of musical chairs. Picture 12 chairs, 6 back to back, and 12 people sitting on those chairs. The music starts. When the music starts, everybody gets up and they start moving around those chairs, moving around those chairs, moving around those chairs. And they keep doing that till the music stops. But what they do before the music stops, they remove one of the chairs. So when the music stops, everybody scrambles to get a seat and one person's left standing. Well, what you have in real estate, and certainly we saw this in 2021, 2022, as the market heats up, you saw more and more people circling around these chairs. And it wasn't just 12 people around 12 chairs and one chair removed. It was 12, then it was 50, then it was 100, then it was 200 people circling around these chairs. And why not? The market in 1 month in Niagara went up $100,000. Everybody wanted to get in on it. The problem is the market stopped. The music stopped. See the same thing on the U.S. back in 2008. In 2008, the market was very, very hot, especially in some key markets. I had a friend in Sarasota, Florida, told me that in the previous year, property values had gone up by 80%. So everybody wanted to get in on it. And he particularly decided to build spec houses, $1 million houses, and he started building about 10 of them. Well, then the music stopped and he was left in a jam. And that's what happened actually, 2022. We had thousands of people circling these chairs and not more chairs. And then the music stopped and everybody was caught. Now, when I say everybody was caught, I should correct myself. Not just speculators were very active in the market. There were also end users and investors. And you know, end users and investors were not caught. They weren't caught in 2008 in the US, and they weren't caught in 2022 in Canada. Why do I say that? Because if you're an end user, you're living in the house, it's your forever home, you're making your mortgage, you're comfortable, life goes on. The fact that it has dropped in value or there aren't lineups of people buying houses, it doesn't impact you at all. And if you're an investor and you've rented the property out and you've got tenants in it and the tenants are paying the rent and the rent servicing the mortgage, then it doesn't affect you at all. That doesn't mean you don't want to see property values going up. You do. And as property values go up, your equity increases and your borrowing power, if you want to refinance and buy something else, you're in a better position to do that. So there's some advantages, but you're not caught the way a speculator is. And I think we're in a very unique position right now. I'm going to go out on a limb a little bit and making some predictions. We've seen prices slide over the last couple of years. And the feeling is they pretty much bottomed out. We've also seen inventory start to swell, and so there's a decent selection of inventory in the market right now. By the same token, we are seeing that because interest rates are due to start dropping, and when you're dealing with investment property especially, as interest rates drop, cap rate drops, and your value of your property goes up in value. And we're right at that cusp right now. So the timing is perfect. The timing is excellent if you're an investor. But the timing is also excellent if you're a speculator. It's a great time to get in the market. There's, as I say, inventory. There's attractive pricing. There will soon be very attractive financial aspects. In the meantime, you can take a variable mortgage or a short-term mortgage, and you can take the benefit of that as well. And the music's about to start. Thank you very much for joining me in this video. I look forward to talking to you again next week.